From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Well, hello, this is the COB, all the stuff you need to know about the day in business and markets. I'm Nadine Blaney.
I'm Kyle Rodden, and I do really like it when we're a little bit more colour coordinated. It's looking fantastic because it's, well, basically the only thing that's really looking fantastic today.
Yeah.
I think it's basically almost every sector lower. At the very least, the market's down by about 1.4%.
Yeah, pretty bad. And we've got US futures looking pretty negative. We've got Asian markets looking very negative. It's just that kind of a day, and that's despite the fact that it looks as if we'll have that debt ceiling, deal passed in the United States. It's back to those fundamentals, those important things like growth and recession and rates.
And speculation about AI, how about that as a fundamental theme? But let's see if we can get the CBO 200, just a little bit of a glance on that now. There you can see it's off by 1.3%, like I said before. The ASX 200, I think, is closer to 1.4, and for the month, it actually looks like it's going to finish down by about 2.7%, because of course this is May 31st, last day of the month. So ending off on a pretty sour note there.
Yeah, sure is. And the week started with so much enthusiasm, but we have given up all of Monday's gains and then some. So we'll continue to keep our eye on what's going on out there. But if misery loves company, we do have Japan's Nikkei off by 1.4%. So it hasn't been this low for quite some time. But don't forget that we had those Japanese markets around 30-year highs. So some profit taking coming in. Got US dollar strength. There just seems to be a little bit of a toxic mix out there right now for markets. We've got commodity prices coming off, Newcastle coal prices coming off, and in that is where you can sort of get our three themes, because so much coming for the RBA today. Yeah, definitely. Well, like you said before, it's that growth story seems to be fairly negative, and I guess it's this question around this narrow path, isn't it? And I was thinking about it today. Maybe it's a little bit semantic, but if it's such a narrow path, it would probably imply that there are other paths that are a little bit wider that aren't the paths that we want to be on. And that means that it's less likely that they're going to be able to get down that narrow path and actually avoid a recession. So does this mean this is like a low probability bet here that they're actually going to be able to pull this off? I think so. Yeah, I think so now. I was getting all confused with the paths and the narrow and but yes.
The narrow path, it must by necessity mean that there are other paths that are far wider, which,
I think that the conditions in the wake of this inflation read today have narrowed that path more, if we can say.
It's not the most probable outcome.
No, it's not.
They're probably not going to achieve it. So they're not going to do it.
I just had a chat with Stephen Koukoulis. We'll put that up online shortly. So look, he reckons that the RBA should still just cool its guns, wait after that surprise rate hike, see what happens, see what comes to fruition. He says inflation clearly has peaked, despite the fact that this read today came in hotter than expected, and that it's the time to just be a bit more prudent, considering that narrow path. But he does not reckon. He thinks that today sort of put the nail in the coffin for any conversation about rate cuts in FY23 or calendar 23, I should say. So global growth concerns, the narrow path, which really, Kyle's not willing to meander down. And then, we had a lot of conversation come from the RBA, about productivity. Yes. There's just so much of a conversation out there.
Yeah, there is. And maybe we'll look at some of the actual sectors now that's, we're driving the losses today, because you mentioned coal prices in particular. Whitehaven and New Hope really at the bottom of the table here. We can only see Whitehaven on this chart, but down about 5.5%.
I got the rest of them on this other one. There you go. I've always got your back. Don't worry. But I think it's worthwhile mentioning as well oil. Yeah. Oil was down. The Northern Hemisphere summer is the start. The driving season, and the Memorial Day weekend was not crash hot, so that has again raised some concerns about the pace of growth there, potential recession. So oil was down, but it's really those Newcastle coal prices taking a real toll on these coal companies here in Australia.
Yeah, and the retailers too, also still in focus. We had a couple.
Look at Wesfarmers, that's a big drop.
Yeah, I don't know if there's anything behind it. I mean, it was certainly off more today than it was up yesterday after that strategy day. So something to kind of perhaps consider there, maybe I guess a lagged effect of the announcement came out. The messaging was very dour from Rob Scott, of course, but I mean, those discretionary aims clearly weak as well. Lovisa, that's a perpetual underperformer.
Yeah, it's just a reflection of the fact that now, the market is pricing in the, a bigger chance of seeing another hike coming through from the RBA in the wake of that inflation data. Whether or not it happens, obviously, remains to be seen, but we'll be covering that Tuesday, believe it or not, Tuesday, 2:30. Corporate news today. The Bank of Queensland. This is a big one. So share price has been absolutely hammered. At one point, it was down more than 7%. So separate undertakings with Austrac as well as APRA, and it's in relation to risk management. I mean, risk management failures at the bank. I was reading an article in the Fin. Chanticleer had been asking the new CEO, Patrick Allaway, who was former chairman,
who
chair.
We spoke to recently as well,
and said, because apparently there was a rumor out there in the market that the Bank of Queensland was in the sights of the regulators, to which he denied it. And then, of course, this has come out today. So, Bank of Queensland.
About that too. He sort of batted it away a little bit. Because it has been, like you said, it's been sort of percolating through the markets for a little while. But, I don't know. I don't know what blew the lid off today, but it's clearly caught some by surprise.
Yeah, and so what it means as well for investors is the Bank of Queensland will not only have to deal with this impost, the extra provisioning, but also, what money has to be spent to bring these risk management practices up to scratch. Look, I think we've got some charts, no? Anyways, Appen I had my eye on. You mentioned Brainchip just a little while ago in relation to the AI thematic. I think that you can look no further than Appen. Appen up by 12% today on no news, but it has, some say, a very tenuous link to AI. But nevertheless, we always see, a local expression of some of these big themes overseas. And NVIDIA is just blowing my mind. I was listening, though, to a podcast yesterday on my way home, as I do, and it was all about AI. And it was saying, look, AI is essentially now, it's just a really fancy pants language predictor.
Right.
So which is why it still has so many mistakes, which is why it's quoting people wrong, which is why sometimes it's making up mistakes, because it's actually, it's still in some ways infantile, although the possibilities are endless.
I suppose so. Blue sky thinking, hope reigns supreme, hype, mania, you call it what you want.
I'm obsessed with it. Anyways, Paladin Energy, yet another really steep fall for Paladin, after we heard that Namibia, I think it is planning to potentially nationalize.
Assets, basically. So I only saw the fine print there yesterday after the markets closed, but not rest assured for the time being, but the government there seems to have pretty strong public support to try and effectively, generate greater value for the state from these assets, and not good.
Yeah, well, not good for the shareholders, perhaps very good for the people of Namibia. Anyways, it was the stock of the day. Andrew Whiteland, Henry Jennings, let's hear what they had to say.
I have to say, this could be a really good opportunity to pick up Paladin. The government there has recently reiterated and talked about, the status quo being the status quo. However, there are a number of big gas offshore projects that are coming up, and it does appear, certainly from the research that I've read, that that is the target of the government's push to get minority stakes. It would be very hard. They'd have to change the constitution to look back retrospectively to Paladin, the Lager Heinrich mine, but they could do it for maybe these big gas discoveries, and they have been specifically mentioned. We've seen this, and it takes time. But the problem is they can't pick it up and take it somewhere else.
Yeah.
But at 52, 53 cents, it does look as if it's got potential upside.
And without trying to go all whisperer on you, this sort of shows one of the issues around concentration risk, whereby you've just got a particular name, whereas if you had a whole basket of them, but you quite like the thematic, another way to play it is just buy a uranium ETF rather than just sort of picking a name as such. I think for people who are brave of heart, it might be an opportunity for you because that uranium story is not going away. So look, I'd say it's a buy, Koshi.
So a bit of a buy buy-dip mentality there. And the other thing I wanted to say about that Paladin story too is that the government was fairly moderate in the way that it was communicating this to its miners, that it really wanted to emphasise that some of the value-added elements of the product have to be kept in Namibia. So try and keep some of that wealth and the benefits of obviously those commodities in the country too. So there's still some sort of scope there, but potentially for Paladin and other miners to sort of work within that, and obviously.
It was what I heard. It was taking a small equity stake. I mean,
yeah.
I mean, can you blame them? Really?
I'm rather nationalise these sorts of things, rent-seeking businesses, all for it. But it seemed actually quite moderate. It wasn't this kind of like, radical. We're just going to repossess everything. It was like, help us out a little bit and cooperate with what we need.
All right. Well, we'll get a call into the company. I know that it has responded to some sort of media the media talk about that, but it'd be interesting to get a on-the-ground view.
Well,
shall we?
Yes, and maybe we'll start with that because I know that at least in the Twitter sphere there's some rabid uranium folks out there. William Symes, he's in for Macro Capital today. Will, do you have many folks on the desk there that are uranium bugs? So I've got a couple of mates of mine that, they think it's, again, blue skies for nuclear.
Look, I work very closely with Mark Gardner, who comes on the show quite a bit, and he's certainly been in and out of uranium quite a few times, both Paladin and Boss Energy, both good companies, and we don't mind uranium in the longer term. Obviously, Paladin's exposed to those geopolitical risks at the moment, but Boss is kind of close to those all-time highs. But in general, we don't mind the space. Okay, to have a little bit of uranium exposure in the portfolio.
Yeah, just a touch.
It was a bad day, though, like putting uranium to one side for commodities in general, for the big miners in general, for coal in general. Do we trace most of that back to that Chinese PMI?
Yeah, look, I think the Chinese PMI figures certainly came in a lot worse than anticipated. It came in at 48.8 and the forecast was 51.4. And so certainly dragging down a number of the kind of big names in the materials sector. Obviously New Hope and Whitehaven was smashed harder than some of the iron ore miners, but kind of dragged the whole sector down.
Because, I mean, obviously you said before we've been talking a lot with Mark as we do on a Wednesday. But the story for a little while is that you've got iron ore prices kind of going in this direction. You've got the global growth outlook going in a similar direction. But for a while there, those valuations on some of those big miners were looking, relatively rich. At one stage, BHP is still around sort of record highs despite that. So are you guys still feeling a little bit cautious when it comes to these really cyclical stocks?
Yeah, absolutely. We have certainly been largely out of cyclical stocks over the past few months. Obviously, your BHPs are quite often core positions for most Aussie investors, but lightening exposure and kind of heading a little bit more defensive in nature. And I think that CPI figure out this morning certainly adds weight to the validity of that thesis. And just being a little bit more risk off and a little bit more risk averse at this point in time.
Yeah, and so on that inflation read, what is the House view as to whether or not that makes it, well, it's more difficult for the RBA now, an RBA that continues to tell us that they are data dependent. They told the Senate Economics Committee today that inflation is still a key concern. So will we get a hike next week, point blank?
Look, I think if you look at analyst consensus at the moment, on the back of the CPI figures this morning, they're currently tipping a hike of 25 bips at about a 17.8% probability. So most of the market still doesn't think it'll be a huge rate hike. But originally I think we were pricing in, 2 more hikes this year. And so I think that inflationary reading could mean it's a little bit more aggressive than what most investors originally thought. That said, a fair bit of the CPI figure out this morning was attributable to the automotive fuel and the excise tax.
Mm-hmm.
Yeah. How much chat now are you getting from people calling up wanting to find opportunities in AI? Has it filtered to that end of things yet? Because I mean, I have little connections to broken houses, and you can just see the interest spike. Is that starting to come through from on the phones? Just like, how do I get involved in this space? Is there anything at home? What's it like out there?
Look, we actually haven't noticed it as much, to be honest. I think the majority of the rally recently has not been driven by institutional money. It's more so been retail money, and so I think a lot of the people that I speak to are pretty aware that the economic situation out there is quite dire. When you look at one of the fastest hiking cycles in history, CPI figures, all those kind of things. Obviously, a looming US debt ceiling on the 5th. So we're kind of still risk off at the moment.
So risk off. So what are you buying? Because I know you guys are pretty active.
Yeah.
So is it defensive names? What defensive names? What sectors?
Yeah, look, I think if you look at the best performing sectors in a recessionary environment, the two best performing sectors are healthcare and precious metals. And I think if you're looking at the ASX, it's hard to go past CSL as a high quality healthcare name, one of the only stocks in the green today as well, which kind of adds weight to the thesis that healthcare is an outperformer in a kind of down market in a recessionary environment. So most of our clients have reasonably hefty allocations towards CSL. And if you're looking at the kind of precious metals side as well, we're actually looking at adding a little bit of silver exposure to client portfolios as opposed to gold. Mark,
You've been hanging out with Mark.
Yeah, Mark's no gold bug. But look, silver, part of the reason we quite like silver as opposed to gold at the moment is that it has far more use cases. About 58% of its demand is derived from industrial use cases, whereas only about 8% for gold. So it kind of ticks two boxes for us there. And I think in the event that the US gets their credit rating downgraded on the back of the debt ceiling, we should see a spike in those precious metals.
Because I mean, talking to a lot of people recently, clearly we're not going to have Newcrest to be able to invest in anymore at a certain point, or not in the same way. So I mean, have you seen any sort of interest in a particular gold miner? Do you have a bias perhaps at the desk for a particular gold miner?
I don't like gold
at all. Oh, sorry, no, you don't like gold?
No, I like
silver.
silver.
Well, you prefer the silver over gold, so no gold.
Look, we've got a little bit of gold.
I think your clients would probably bully you into having a bit of gold, wouldn't they?
Well, I think silver's kind of been a little bit of an alternative. We do have a little bit of gold. In terms of looking at a kind of undervalued gold name, Regis Resources I think is probably one of the more undervalued names at the moment. We probably prefer Gold Road from a long-term growth perspective, but if you're looking for a value buy at the moment, we quite like Regis, and particularly with gold at those elevated levels. If they start kind of raking in high profits, should see a higher dividend yield on Regis as well. So,
because Silver Lake has the gold and silver,
not a lot of silver.
Not a lot of silver at Silver Lake.
I don't think it's a huge proportion.
What's the big silver play on the ASX?
I think there's one called Silver Mines.
Silver
There's
Mines,
not a lot of pure play silver, so you would do that via an ETF.
That's
so
the best play. Yeah,
we're doing it through an ETF, ETP Mag, which gives you direct exposure towards the underlying asset, being silver. I think the other thing for us as well is that gold's obviously quite elevated right now, and if you look at the gold to silver ratio at the moment, it's well above its 30-year long run average, and so indicating that silver's undervalued at the moment relative to gold.
Okay. Well, look, it's been awesome to have you in.
Thank you very much.
You're welcome
Appreciate
back anytime.
Thank you.
And say hi to Mark for us.
William Symes there from Macro Capital, of course.
I just thought before we get to the leaders and laggards,
yes.
check this out. This is really poor looking from a market map perspective. So you can see a little bit of life in gold, a little bit in some of those, industrials. Qantas is up 1%. AIA is up by close to a percentage point, but it's really negative when you look at the percentage falls on there. So you should put a positive spin on things. Shall we look at the leaders?
Let's see where they were to be found. Megaport's up by 4.8%, and Brainchip Holdings, again, arguably another one of those AI thematics locally being pushed higher. Yeah,
I was just going to mention Megaport because it was really battered and bruised, even on a day that Macquarie came out and upgraded it, and I think that was Monday, just going by memory. So it's interesting to see that it seems to be catching up, maybe with that recommendation. But anyways, 5% is pretty interesting. Brainchip, AI, Illumina. I'm not seeing any news associated with Illumina, which is an interesting one when we've got so much pressure coming through on the commodities complex.
Yeah, Telix has been bouncing around a fair bit recently. Obviously, we had that sort of face-ripping rally after it reported a few weeks ago, and it seems to be kind of just, I guess, from a technical point of view, you'd call that distribution, but it's up today by 2.74%. I know, that's the way you do it in financial markets. And impenetrable language,
I just rely on news.
Dazzle them.
De Grey's was upgraded to a buy from a neutral by UBS. And so that always, or usually does, some pretty good things for the share price, and it has today up by about 2%. Now, just off of that list, Paladin Energy is picking itself up off the mat. It, again, I said, responded to some of that media well, not speculation, the media reporting on that Namibian situation, which is not yet confirmed. And other than that, Northern Star, I suppose, is one of those companies that have, helped mitigate some of the losses for the market. But again, it's been a pretty tough day out there, as evidenced by this laggards list.
Yeah, and let's go to those now. So Whitehaven Coal ended up at the bottom of the pack.
Yeah,
there,
Whitehaven and Bank of Queensland were sort of battling it out all day for the worst performer.
Well, yes, and in AFL terms, if you're a Victorian, you'd call it the wooden spoon. Do you call it wooden spoon in rugby
I
as
have
well?
no idea. What? You're asking me what we call things in rugby?
No, you've been here for 15 years. Yeah, it's been longer than me, I guess.
Yeah. No.
Anyway, there we go. There's the battle for today's wooden spoon, Whitehaven Coal and Bank of Queensland.
What does that mean?
It's like the kind of like non-prize that you get for finishing at the bottom of a ladder in the AFL.
All right.
The Victorians out there would know, or anyone who lives south of maybe the middle of the country. But anyway, we digress. Ingham's didn't see much there. Don't know if there's anything happening with chicken prices.
I don't know, which is an interesting one. I don't see any news associated with Ingham's Group or Premier Investments. I think it's just that sentiment toward consumers.
Story, yeah.
Obviously, and then you've got New Hope Coal with the Newcastle price of coal retreating. Lifestyle Communities is just off the page, but I thought it was worthwhile mentioning it because in the small cap space came out, it was a negative update coming from the company. It's still seeing good flows from annuities, but it did have fewer settlements. And today, Goldman Sachs is out on the company and has actually lifted its price target to $27.95, but still getting sold off, and pretty significantly, by 3.3%. And then Wesfarmers, it's unusual that you see Wesfarmers, particularly because it's such a quote-unquote defensive company.
Yeah, low beta company.
Yeah, but on a day like today, when the sentiment has just turned, particularly toward retailers, it's one of the worst performers, down more than 3%.
Let's get across the smalls now. This is always fun, and
I think Archer is to do with AI as well.
Archer Materials is okay.
Yeah.
So what do they do?
Well, they talk about quantum physics being incorporated into their technology, but I reckon it's just a play on that. BetMakers has done a restructure. Okay. Shares up by about 20%. And the restructure, by the way, means taking a whole lot of cost out of the business, and that includes jobs. You saw Appen on that list again, that AI thematic.
Yeah, and you're going to have to lead us through here as well. You got nothing there?
Nah, got nothing. Usually I do. Got nothing today on those ones.
That's right.
It's been a busy day. We've been at the SIA conference for the past couple of days.
We have.
We've had some great conversations there. I had a fantastic conversation today. We don't have it online because it was a panel discussion with some familiar faces, Blair Hannon from Global X ETFs and Cameron Gleason from Beta Shares, Martin Randall from LGT Crestone. So look, we've got a whole heap of content on the website from the SIA conference. Chris Joy today, Danielle Akiye caught up with him from Coolabah Capital.
She's very good at the Vox Pop, actually.
I know.
We should get her on street, like a street
born
talk
for
thing.
this whole, well, we call it TV thing, podcasty thing.
We'll have to get her down at Martin Place on every
Rates Day.
Rates Day. Yeah.
That would be awesome. Tonight, we've got actually a lot on. It's all US based. Jolt's job openings, the quit rate will be interesting in there.
That's huge, yep.
The Chicago PMI, the Fed Reserve's Beige Book, and then we've got a whole lot of these FOMC speakers. So it's not just rates, I guess, that they'll be asked about, but it'll also be whatever happens ultimately with this debt ceiling.
Yeah, and actually we'll have that vote, I think, in the next 24 hours as well. And there was a little bit of rancor there apparently in Washington around some of the details. Yeah, divided Congress, who would have thought. And tomorrow as well. What have we got up there? House, of course, June 1st. God, first day of the month, of course, it's going to be the core logic house price update. And the RBA did allude in a lot of their commentaries recently to the recovery in house prices as a reason for them to be, on guard, as well as the weaker Australian dollar too. But global manufacturing PMIs, that'll be the final release for the month. So perhaps not as influential as the numbers we got a fortnight ago, but nevertheless, we'll get a good pulse check on the global economy, especially after today's week figures out of China.
So Mesoblast is putting out its quarterly, that's always a volatile stock, T&E, trading ex-dividend after updating the market last week, the week before last. So we'll be watching all of those companies. Look, right now, what's really in focus is just that data from China, those global growth concerns that you've rightly flagged right off the top. Asian markets have been hammered. Hong Kong stocks almost confirming a bear market. The yuan has dropped on that China market miss. So again, it's just some of those same themes coming to the fore as we still will be watching for that U.S. House vote. It's expected to happen urgently on that debt ceiling suspension. Of course, money's expected to run out on the 5th.
Yeah. I think we're going to have a little bit of a puke over the next few days, but we'll see how it goes. Nevertheless, very, very busy. And well, of course, if you want to catch up on everything that we did do today, it's on your website and app. Fantastic content there until tomorrow morning.
Yeah, just to reiterate, this local market, I mean, now that we've had the match out come through, the S&P ASX 200 down by 1.6%. So for the week, we're now down by pretty close to 1%. So that was a really terrible day. And we've got US futures still quite negative.
Yeah, and down 2.7% for the month of May. Perhaps that's the note that we'll leave them on. And hopefully we pick things up, well, on a better one tomorrow morning.
We'll see you from 9:30.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.